Hi there, Tony Sycamore here, IG's market analyst for Australia. US stock markets finished the week on a strong note as the University of Michigan consumer sentiment surprised to the downside. In the US, consumer spending accounts for about 70% of GDP, and after peaking at 71.6 in July, a fourth straight month of declines provides further evidence the economy is cooling, which will enable the Fed to stay on hold into year-end and into the first half of 2024. This week, the key economic event in the US will be Wednesday's CPI report, which is expected to show that headline inflation fell to 3.3%, declining further from that peak we saw back in July 2022 of 9.1%. Now, last week we heard the Fed Chair Powell sound hawkish, which I think was seeking to manage the dramatic easing in financial conditions that have occurred since late October. If you recall, we've spoken about this tightening in financial conditions, removing the need for the Fed to raise rates again. Now, we expect to hear more of the same from these Fed speakers, which are due. There is a busy lineup of Fed speakers due this week. And once again, we think it's not going to be a pivot. It's just pushing and helping to manage that financial conditions index, which they do not want to see become too easy. Otherwise, they will need to raise rates again. Let's take a look at the charts as we start the new week with the S&P 500 in focus. Okay, so this S&P 500 chart, we've spoken about the idea that we believe this sequence of lower lows and lower highs as not being a reversal lower, but as being corrective. And we have reinforcement for that view, given the fact that it closed initially above the 200-day moving average. So there was a very brief look below that 200-day moving average. It got above there, and then, of course, it got on Friday night above this 44.30 high from October. That means that the sequence of lower lows and lower highs has ended. If we look towards the chart here, you can see that there is some important trend channel resistance coming in around 4,500. That comes from this 46.34 high from July. I would expect sellers to be operating here, at least in the initial instance. But if we could get above there, the S&P, then of course that would open up this 45.66 high and this July high at 46.34.5. On the downside, well, there is a layer of support coming in around 42.80-ish from the 200-day moving average, and then this 42.35 low from October. Turning to the Nasdaq, well, the Nasdaq we've been speaking about for about 5 or 6 weeks now, really saying that we thought this move was part of a correction. It wasn't a reversal lower. And in fact, we did say that we thought that the Nasdaq was missing a leg lower, really going back to about 6 weeks ago, back in September. We said, look, this just isn't correct. We need to see a pullback into this 14,200 to 14,000 support area. And that's exactly what it did, a decline of about 12% before rebounding from this trend channel support and, of course, the 200-day moving average. Now, the surge on Friday took the Nasdaq well above the trend channel resistance coming from this July high. And that's another positive indication. For me, it really sets up a test of this 15,719 high coming in from mid-September, and of course, the 16,000 high from July. If we want to look a little bit further afar, we can look towards our Elliott wave analysis, which you can see on the chart here. You can see that we've got a wave 1 and a wave 2. We see this as being an impulsive wave 3 higher, and then this whole corrective sequence is the wave 4. Now, after a wave 4 in Elliott wave, you generally get a wave 5, which means fresh all-time highs above this 16,062 high. For me, the ideal wave 5 target comes in somewhere around 16,500-ish. So let's see whether that can play out into year-end. Probably more likely it'll be a story for 2024. But ultimately, after this entire sequence has played out, I think that is where the Nasdaq goes. And that fits with our whole view that this has been a correction rather than a reversal lower, and that new highs will follow. Thank you for listening and have a great week ahead.